How's it going? Welcome back. It's Jonathan. Okay, so video attempt number 2 for the day. So I just did a probably like a 30-minute video just then, and I ran it by someone because I was talking about some certain topics, and I ran it by them, and they told me not to publish it. So I'm going to take a step back, take a different angle, take a different approach because there is some information I want to get out to you, but I don't want to waste my time again. So I'm back. Where it's now the 30th of December, and in this video I'm going to be talking to you about a topic called solar dates. Okay. Now, to use solar dates, you actually need to use an ephemeris, but I've got some charting software that we can bypass the use of ephemeris, and we can actually just do it automatically. So, what is solar dates? Well, solar dates are the dates that mark a certain position of the sun around the ephemeris and in each zodiac sign. So if I go ahead now and just turn off all these planets, and I just leave the sun as the basis that we're looking at. And we look at the sun, which is currently on the 31st of December 2022 at 12:15 p.m. We can see the sun has a longitude of 279 degrees, 22 minutes. Now, what does that mean in layman's terms? Well, that just means that the sun, so if we have 360 degrees as our zero starting point, we've gone through this many times. Zero is the start of the new year. It starts around the 20th of March, okay? That's when it starts each year. You go back to the last video to take a look. This is the natural year governed by the Earth and the Sun and our positions in planetary. And we move into Aries at this point, and then we move around the zodiac just like that for a full 360 degrees, okay? Now, 360 degrees is complete rotation. We have 365 days a year. That's why we need to convert calendar days to degrees. And if you go through and you take a look at for example, each 90-degree angle, you'll notice that there's different amount of calendar days through each 90 degrees. So as we move around the zodiac, and we go from the 0 point to the 90-degree point, 90 to 180, which is the opposite, 180 around to the 270, 270 back around to that 0-degree point. There are different days, so it's not just a simple 90-day count. Okay, so it's not simply looking forward 90 calendar days each time. The sun moves in each zodiac at different time periods in calendar days, and that's why we have, for example, February being 28 days, and then we also have, some 31-day months. So we can't. It's not just a simple calendar day count, and that's why we use solar degrees to get more accuracy on what's the exact day that the market may change direction. So if we count forward, for example, 279 degrees, and we want to add, for example, we want to know what the position of the sun is. So right now it's 9 degrees Capricorn. Well, we would look at 9 degrees in the next zodiac sign, which is in this instance Aquarius, Pisces, Aries, and so forth. So once we get to 9 degrees in Aquarius, if we were using the 31st as our anchor point, then we'll be looking for the market to change, or at least provide some resistance in the market around that date. So I'm going to be using that exact same phenomena, but instead of doing it through an ephemeris, and I teach how to use this graphical ephemeris, and I teach how to use a paper ephemeris in our 8-part mini series, which you can find below, and I'll walk you through that very soon. I'm going to be using an automatically calculated solar degree count or ephemeris, and that is with the trading software called Optima. You can buy that package. It costs about maybe $2,000-3,000 to get the Gann trading tools, and that is going to give you a basis to start your research from. Now, when we start from using solar degrees, we need to have an anchor point. So we don't just use what's 30 degrees from here, what's 90 degrees from here, etc. We need to have a specific anchor point. Again, we'd always use tops and bottoms. So we use this top, this bottom, these tops, these bottoms, etc. You need to use a very significant top or bottom and start to count from that, because then that'll give you the best starting point to be moving forward from. Now I've decided to use this 19th, 20th, 21 sort of time period here, where the market ran into a top, and then it was the beginning of that 2020 bear market. Okay, I've decided to use that top because I think that top is probably a significant top, and I want to start moving forward in time at 30 degrees. So what I mean by 30 degrees is, if we're using the sun in this example, it's going to be 30 degrees or its exact position in each zodiac sign. Okay, now this is financial astrology. It's not when we use this zodiac sign, this zodiac, we're doing it for financial astrology, and that is just purely, okay, so it's nothing crazy. It's just purely looking at where the planets are, for example, Mars, Merc, etc. It's looking at where the planets are and then looking for those repeats into the future and what the market action was here. Now, nothing's guaranteed, of course. Nothing is, it's more science than it is, a certainty. But we use this probability to ascertain when the market may change direction in the future. And that's what I want to just give you one of the keys to market forecasting. So what I want to do is I want to count forward 30 degrees in time. Now, again, I can't use calendar days exactly because then that would put me off every now and then, especially if we're running into weekends. So what I want to use is I want to use solar degrees, and I want to know its position. So from the 20th of February, if I move forward 30 solar degrees, what date would that be in the future? So I'm going to turn on solar degrees. I'm going to anchor it now to this top of the market. I'm going to move forward 30 solar degrees. So from the 20th of February to the 20th of March, we have moved forward 30 solar degrees. And that 30 solar degrees moves forward into 20th of April. Then it's the 21st of the 5th, 21st of the 6th, 23rd of the 7th. So you see how each month isn't exactly the same. And that's the sort of position that we'd be looking for when we use this method of forecasting. So now that we have, and I'm walking you through this video as both educational and instructional. Now that we have our starting point for solar degrees, we've now got these dates that we should be on alert for when it comes to actually finding, potential market reversal points. So what I would do normally is I would mark out, these areas. I'd give them, a couple of days left and right of it, and I'll try and find, based on price pattern time, where the market is likely to change direction. Now, there's many different ways that you can forecast market movements. Some of them are using both lunar and solar eclipses. But what you want to do, and the secret to this, is that you want to find an anchor point. Now, a lot of people don't understand the whole theory of anchor points. And that is, in my opinion, the secret to understanding where you should forecast from. Because as W.D. Gann would always say, if you have the right starting point, then you'll know what cycle is currently playing out. So if you're just going to be using every full moon and saying, oh, the market's going to change direction every full moon, well, is it really the full moon or the new moon or the lunar eclipse, etc., that is changing the market direction? Or is it coinciding with another cycle that is playing out? So I need you to do your full research and not just be, blinded by one basis of this theory. Okay, so now, as we know, the moon has, around a 27, 28 day orbit. Some instances, some would go, depending on the orbit. And if we go forward, for example, if we go backwards, we can see that it just moves so much quicker than that sun. You probably can't even see it. It's just moving so much quicker than the sun because of that shorter time frame orbit. So you're actually getting, in each zodiac sign, for example, so if we move into here, we get one hit in that zodiac, two hits in this zodiac, and then it's out of it. And in this zodiac, we get one hit, two hit, three hit, it's out of it. So we're getting different hits in the zodiac depending on the month, or I should say position of the zodiac. And that might give you different cycles in each month. And you're not going to be able to get that exact repeat that is occurring as in my opinion, as important as the sun's position as it moves around the zodiac. Okay, I think the sun is the most important factor when it comes to forecasting. And I've done an 8-part mini series, which I'll go into soon, which goes through the sun. And I think that when it comes to, our daily cycles, I think the sun is the king here. Okay. So now what we've done is we've got our anchor point, the 20th. Now what we want to do is we want to see how the market reacts around these. Okay. I'm going to be using two elements in this video. I'm going to be using, first of all, time and then price. And then we're going to have a bit of commentary over how the market reacts as it gets around these dates. So we're moving into the first time count. Now the first time count is around this 20th of March. Now as we can see, we've got the Friday 20th and then Monday 23rd. So we want to see how the market reacts around them. The market is coming down. Just got to make this a bit lower. Market is coming down into that first time count. Moves into Friday now. And then starts to reverse after that. So the market moved into the Friday, hit the low on that Monday straight after that time count, hit a low, and then started to reverse. That is one reason why we were looking forward so hard and so carefully at that first time count. Because if I get rid of this, and this is how I'd normally lay out my chart, if I get rid of this rectangle, you'll know that the date here is the 20th of the 3rd, and that there is roughly lining up with our natural dates, which are the equinox and solstice dates. And that's why we had such great emphasis on this date here. And we went through that in the last video. So now that we have the first time count and we have at least another anchor point we can work from, I want to know now if the market is likely to find resistance from a time price pattern here. And I want to know what the market is likely to do around these dates, if it's likely to find tops or bottoms. Okay, so we're going to move forward. We're going to see how the market reacts in and out of these dates and also the time counts. And also just want to keep in mind that I'm using only just one date here, okay? So what we would normally do is we'd line up, I say there's around 6 dates a month that we'd line up and we'll start counting from. And they have very specific degrees of the sun that we're looking from. And we would look to see how the market is reacting around these dates. So we'll come up to that 38.2% level. The market has rejected against it. And now we're possibly looking for a low around that 20th, 21st time period. Okay, that's what we'd be looking for. All right, so the market came down, hit a low on the 22nd, so hit a top on the 17th, trended down into the time count, hit a low on the 25% level, and now it looks like it's starting to push higher. Now what we'll do is we'll try to, again, we've only listed one date. We're only looking at one date, so we're not looking at all these highs and lows. So we want to know now what the market does as it moves into that next time count. Looks like the market is starting to trend high. We might get a high or a low. We've got to see how the market reacts around this 38.2% level. It's broken it. It's hit a top on that date. Market's pushing, trying to push lower. It's hit that, it looks like it's found some resistance as well on the price level. So it's hit a top time, hit a resistance price level, looking to reverse now. Move into the next date. And again, I like to just box out my dates just so I can see how the market reacts around them. Moving down, moving up. What are we doing? Okay, so now we're sort of moving up just shy of this time count. We've moved down. I'm probably not going to get a lot of reaction around here, but we'll see what happens. The market has staged a low on this time count before moving higher, but we've got a lot of indecision in the market right here, so we might get a push higher or lower. Okay, so we've moved down again into that 50% level. Tried to break it, remained above it. All right, we'll see what happens now around this next date. And we have the 61.8% level, which is showing significant resistance here. Market's moved up, tried to push through that 61.8% level. We're hitting into our time count now. Market's reversed on that time count and it's moving down. So just shy of 1 day of that time count, the market hit that percentage level, started to move down again. So I would do that, then I will keep going forward and try to see how the market reacts in and out of these dates. So it looks like we've hit a low, tried to push higher, didn't get higher. In and out of these dates, and then I would be looking for market to change direction around these dates, move higher and lower from there. So you can go in, completely look at these yourself, move forward 30 degrees each time, and you'll be amazed at how many times the market changes directions, pitches highs and lows on these dates. We get a perfect low here. Highs and lows on these dates because we're moving forward 30 degrees in time from what we'd consider as an anchor point. Now, eventually this anchor point, depending on what your anchor point is, will become invalid and the market will change vibration. But the anchor point I showed you today is actually a natural anchor point, and I think that you should probably study that a bit more. There is a very specific reason why I use this top here. And if you look at the degrees of the sun, and I won't go into that here, there is a very specific reason I use that. And I think that that'll be valuable, very valuable information for you moving forward. So what I'm going to do now is I'm just going to switch over to our back-end portal, and I just want to show you another element of forecasting, okay? Give me one. So just moving into our annual market forecast for 2022, I just want to show you the Dow Jones interactive chart for last year. Because what a lot of people do is they get into the habit of forecasting highs and lows. And I think that's a great and beautiful form of analysis that you can, build upon and actually help. If you do intraday trading or you're looking for major market tops, etc., I think that this is a beautiful thing. But if you want to take it one step further and you want to look at not just the specific days that the market's changing direction, but you want to look at the market, a chart that may tell you, may tell you the directional bias of the year ahead, then you need to look at what's called a mass pressure chart or market forecast, okay? Now we build these interactive forecasts in our back end, and this is exactly what we've provided you, for our 2023 forecast. If you see, we've also got our 8-part mini series. That's actually the 8-part mini series is what's going to teach you how to build these. Okay, I'm going to show you the actual steps that I use to build these. And I'm doing that because I don't think I'm going to build these myself for much longer. So I'm just trying to show people now how to do them themselves. So what we have here is we have our market forecast for 2022. And this shows one of these curves. I won't go into which one's which. One of these curves is the forecast, and one of these curves is the actual market data of the Dow Jones. Okay, and this is our interactive cycle. So what we can see is the market, and both the market and the forecast, trended low at the start of the year, had a little bit of push up, trended lower, had a bit of a push up. So we can see we got a little bit of a polarity flip here, and I'll go into that in prior and also future lessons. The market had a bias to form a low around October. Once we hit that low in October, we was to go for an end of year rally before a natural decline into that last week or two into the year end. As we can see just how beautiful this sort of thing can be, where we get these forecasts producing what can be a run for the year ahead, and just how beautiful the market can actually react and just prove that history is a great determiner of the future. Now, this is not price, okay? This doesn't go into saying that, the market's going to rally 20, 30% into the future. No, this is angle, okay? So this gives us an angle directional bias, and this can show us what the likelihood of the angle is for the year ahead, and that can help us gauge if we should be bullish or bearish, okay? Now, in these political and economic and forecasting reports, I go through all the elements on what you need to be looking for to not only forecast market angle, but also how to forecast major world and economic events. I show you the actual framework that I use, that I pinpoint major economic, political, and world events. I show you the framework. And now in the 8-part mini series, I'm going to be showing you how you can actually build these cycle forecasts yourself. Okay, I think that is the real kicker. And this is our market forecast. This was for 2022. So if you're interested in that, there is a link below this video. I'm going to go in and I'm going to show you exactly the framework we use. But if you don't want to go into that, that's totally okay. I would encourage you to research everything that I've shown you today on pinpointing tops and bottoms and using our ephemeris, and just the sun in this instance, using our ephemeris to pinpoint where the market may change direction. Now, if you want to go super deep into your research, you can pop on some more planets and sort of research, their planetary alignment or locations in the zodiac and see how that repeats into the future. But from my research, and if you're doing short-term, monthly, yearly forecasting, I think that the sun in this instance is probably the best method that you could use. Okay, and that's why I focus on it majorly as my #1 tool. Okay, so that's all I have. And yeah, Happy New Year. I'll talk to you very soon.